slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today, we're talking about the implications of gifting assets away. Todd, if you're trying to protect your assets from the cost of long-term care expenses, what are the risks in giving your assets to a child rather than transferring them to an irrevocable trust?
Yeah, that's a great question. So many people feel like, oh my gosh, it's an irrevocable trust. I've lost all control. I've given up the ability to do just about anything. You hear that all the time. But you know what? Think about it. If I instead gave my investment portfolio to my children, right, or my rental property to my children, how much control do I have over that? I got none. I got to rely on them to pretty much do everything, not to mention the fact that, let's say I gave my rental property away. Technically, I can't sell it. I can't do anything without the children doing it. And what you forget is the children then would be entitled to all the rent. Well, you gave away your rental income. What about if a child gets a divorce and you gave them an investment portfolio to hold on to? Well, that money would all be subject to their divorce or any of their creditors. Plus, it all gets picked up on their income tax return. Folks, you give away assets, you lose all control and create lots of adverse income tax and gift tax consequences. You're way better off setting up an irrevocable trust to protect your assets from the cost of long-term care.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699, or you can request a copy from LegalExchangeShow.com. Once again, 866-848-5699, or you can request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visit usvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by taking part in this year's DAV 5K. For more information, visit dav5k.boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Happy Jobs Friday, Mr. Mike.
Happy Jobs Friday. Ooh, came in a little hot there.
On a good day's work. The jobs report is our key focus for today. Ben, do these lights not work anymore?
They don't. I broke them.
What'd you do?
You were gone. I started kicking stuff by accident, and I broke them.
In any case, we saw the labor force, the jobs report, the non-farm payrolls report, came out at 8:30 this morning. It's our top story of the day because it's right now in a place where I've affectionately referred to it. It's not my term. It's actually Bob Elliott from Unlimited Funds. He used to work at Bridgewater. But he coined the term, and I love it, transitory Goldilocks.
Ooh, okay.
It's wonderful. And the idea behind it is that there's always a period in every economic cycle prior to a recession, which, again, I don't know if it's going to happen, but there's always a period before every recession where people say, hey, things are just cool enough. If we can just stay like this, it'll be fine. And then inevitably it doesn't stay like that forever because economies are dynamic systems that are always changing.
Yep.
But here's what we saw this morning, because this is the quintessential transitory Goldilocks report. 150,000 jobs added. Not too hot, not too cold, just right. The unemployment rate ticked up from 3.8 to 3.9%. Not too hot,
loosening,
not too cold,
of the labor market.
Just right. Average hourly earnings up 0.2% for the month, 2.4% annual pace. Not too hot, not too cold, just right. When you look at my favorite statistic for this business cycle, which is aggregate payroll growth. Aggregate payroll growth, fancy way of saying how many jobs did you add and how much growth is that? And how much did wages go up? How much growth is that? Combine those two, and that's the aggregate payroll growth. Hours worked plus the money earned during those hours. What we saw for this period here over the last 12 months is one of, again, we're talking Goldilocks here. You saw 5% aggregate payroll growth, which brings us back to pre-pandemic trend levels. This number, as recently as a year and a half ago, was growing 8-9% year over year, which is why consumer spending was able to drive inflation up and accept the price increases that were being put through by companies.
Yeah, you remember we talked about this in all likelihood was, hey, if you have a job, your wage increases are probably not keeping pace with inflation. But the reason we're still having inflation, in addition to all the government stimulus, was the fact that in the aggregate, when you add up the raises that existing employees got plus the number of people who got new jobs, take-homes were up a good 8-9% at times.
Yeah. So you look at the big numbers that we focus on, and they're all in that Goldilocks range. They're just what you want to see. And specifically, they're just what you want to see so that you think that you're not heading into recession, and maybe you don't. But also, they're just what you want to see because this is the kind of report where the Fed can say, yeah, we don't have to do anything. If the economy continues to grow like this, if you have 12 of these a year, you're adding 2 million jobs at 2.5% wage growth.
It's basically population growth.
That's it, man. That's what you want.
Yeah.
Now, do I think that everything's all rosy and hunky-dory in here? I don't. Remember that the jobs report, it's made up of two different surveys, actually. One is a survey of households. They send... Do we know how they do it now? Is it postcards? Is it emails? I've never been... How do you get surveyed?
Carrier pigeon. Yeah, you don't have a carrier pigeon landing in your home, apparently, Chuck.
In any case, they send these out to tens of thousands of households and a smaller number of businesses. There's an establishment survey as well, which is the business survey. The business survey is where you get that payroll growth from, that 150,000. The household survey showed a decline in number of people employed by 348,000. So there's a divergence there. now.
So again, 150 growth when you talk to businesses, 350 decline when you talk to people.
Yes. And by the way, neither one of these is right, I have to emphasize. If you want to
Or if it is, it's coincidental.
Right.
We won't ever know.
They're surveys. This is not written in stone that this is how it is. This is, again, the government sends out 2 surveys, and they give completely different results in this case. Mm-hmm. So when we look at this and try to make sense of what's going on here, it's a question of, hey, when these 2 numbers diverge, how can you tell which one to believe? And I don't think there's any science to it, quite honestly. What some people like to do, and the approach that I've seen, the establishment one tends to be a little bit more reliable in terms of matching other growth metrics. And so I've seen some economists say, hey, weight it 2/3 to the non-farm payrolls number and weight it 1/3 to the household survey number.
Okay.
And if you do that, directionally, you're going to have a sense of where things are going. So if you were to do that right now, 2/3 to the household number, 1/3 to the, 2/3 to the establishment number, 1/3 to the household, you get payroll growth of pretty much 0.
Yeah.
Which might be accurate, might not. We don't know. This is one data point in time.
Correct me if I'm wrong. For most of this year, I want to say that the household survey has been showing weaker numbers than the establishment survey.
It has been. I'm trying to get the exact numbers here, and I'm just looking for what the data series is called in the system I use, so I'm working on it.
Which I think, again, feeds into one of the other narratives that we have heard from people and surveys over and over, whether it's the Michigan Sentiment Survey or others, which is people feel generally, people seem to feel pretty bad when you talk to them about the economy, but the hard numbers that we look at when it comes to things like spending don't seem to back up those hard numbers, those feelings about the economy, which I find interesting.
So if you're looking at this report and the actual impact that it has, prior to this report, the 10-year U.S. Treasury was trading pretty much flat at about 4.66%. Immediately afterwards, money moves into treasuries. 10-year Treasury is now at 4.51, down 12 basis points. I'm sorry, 4.54. I totally butchered that. Why? The idea is, hey, if wage growth is cooling and economic growth is cooling, but it's still in that just right place, then the Fed doesn't need to do as much. And this is also reflected in shorter-term rates as well. The 2-year Treasury, down 8 basis points. Hey, the Fed's not going to have to do as much in the next couple of years. That's the message that's received. And if you still have an economy that can grow at this rate, 150,000 jobs a month at 2.5% payroll growth for the year, well, then you also get the second part of this, which is you got stocks up today as well.
In spite of, which we'll cover later, fairly disappointing earnings from the single largest member of the stock market in the United States.
And the fascinating thing on this is that when you look at how you could message this if you want to, and I'm not saying that you should, but if this is one of those transitory Goldilocks periods instead of the softish landing that Jay Powell's hoping for, here are the 2 messages. Stocks and bonds rally on slowing economic growth to, soft landing. That's the optimist bull case.
Yep.
The bear case is stocks rally as it looks more likely that you may have job losses in the future.
Yeah, I think that's the point that I would hit home here, is that a soft landing in the short term looks a lot like a recession.
Yes,
the beginning stages of a recession. They both are slowdowns in economic activity.
They both cross through this point.
Yeah.
And so
it's just does it continue on that downward trend?
Yes, and that's the question, because we've been saying ever since the GDP report was released a couple weeks ago, we said, look, growth has peaked and there's going to be a growth slowdown. The question over the next 2 quarters is the pace of that growth slowdown and where it bottoms. If this is where it bottoms, you've got a soft landing. If this is not where it bottoms, you've got a recession. And I don't think there's any conclusive data either way right now. But we're going to find out in the next couple months. I think we're finally at the point where the next 2 to 4 months, you're going to see if this recession is actually going to materialize or not. And I don't have any insight into it. I am not calling any recession at this point, or not.
I'm starting to move my likelihood of the high inflation scenario for 2024.
You're coming around to my view.
To kind of my least likely point.
You're coming, yeah.
Right, like that was up there as kind of almost equal weighted to recession in 2024 for me when I looked at things back in the summer of this year. Today, it's moving towards my least likely scenario that inflation is our top concern of 24.
I got soft landing at 30. I got recession, hard landing at 40. And I got no landing, rebound in inflation at 30. Soft landing and rebound in inflation are kind of in the same ballpark for me right now. As the data evolves, we'll see where things go, but we're moving more towards the rebound in inflation, if it happens, maybe a 25 or 26 phenomenon after a recession, as opposed to an issue in 24.
I know we got to take a break. I want to talk about a couple things. One, there's some commentary from Jerome Powell about this exact circumstances that we're going through that he brought up on Wednesday that I want to talk about and what it means now for Jerome Powell and the Fed's next meeting and what he needs to do. I also want to think about what you'd look at from an economic indicator standpoint that tells you whether we're heading for the recession or the soft landing. Because I agree, there's not a whole lot of data that you can pull out today, but over the next 3 months, what data points, other than the common ones like the jobs report, can we look at to determine?
Like, what do you mean other than the common ones?
Other than the monthly jobs report, what data points should we be looking at to determine which direction we are heading, either recession or soft landing? I have a few thoughts. Let's take a quick break, and we'll cover those next on the Financial Exchange.
Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Fine-tuning your financial strategy as the year comes to a close is very important. So this month, we're sharing what we believe are the most crucial year-end financial tips. As 2023 winds down, there are several opportunities for you to consider that may help you end this year with as little concern as possible about your overall planning. Things like maximizing your charitable giving, offsetting your capital gains, and contributing as much money as you can to your IRA or 401k plan. We'll walk you through these issues and more in our new free guide called the Top Year-End Financial Tips. Get yours today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV and the 2023 a DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston. Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, you can create significant problems. Gifting assets to your children is admirable, but may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing & Dolan and asking for their brand new guide called Making the Most of Gifting Assets. In it, you'll learn about information related to the gifting process, what tax issues may arise from a major gift like a home or a vacation property, and what happens to the asset if a child has creditor issues. Call 866-848-5699. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Miss any of the show? You can catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's DAV 5K is Saturday, November 11th at Fort Independence at Castle Island. The race is sold out, but you can still help by making a donation right now. So go to dav5k.boston and help support these great American heroes. That's dav5k.boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation.
Mike, you said that you wanted to touch on one thing that Jay Powell said in his press conference that is now maybe starting to trouble you a little bit?
Yeah, so he was asked specifically, we talked about this yesterday, but during the press conference, and by the way, during the press conference is where I think all the meat from his speech, or not his speech, from his press conference came. Like, his speech was very exactly what you would expect. The Q&A actually got what you wanted out of it, which was, hey, how do you view a few different things? And so he was asked specifically about what the Federal Reserve believes it means for the 10-year Treasury yield to have climbed to the point that it has. And his ultimate statement was that we do believe that it tightens overall financial conditions, and this part he didn't say explicitly, but implied that we might not need to hike quite as high if long-term rates go high. The caveat that he put in there was that if rates right now have just been going high because everyone believes that we're going to raise rates, and then they start coming down because they don't believe we're going to raise rates, then guess what? We have to raise rates. And that's exactly what you have seen happen since Wednesday.
Yeah, and this is the thing that's kind of self-correcting when it comes to rates, which I think we talked about yesterday, which is, hey, if stocks sell off, it's generally not something that corrects itself, because a stock sell-off usually means then there's less money in the economy, which means the economy slows further, all else being equal. An interest rate sell-off, and rates going down typically begets more economic activity because it becomes cheaper to borrow.
Yeah.
Which in then turn tends to push rates back up eventually. Now, it doesn't happen necessarily in a week.
Sure.
And there has to be data that starts to point to that. But in theory, one of the things that you could worry about if you wanted to is, hey, if these, just as an example, mortgage rates. Back, what was it, a week and a half ago, I think? Let me get the exact date. Yeah, here we go. 2 weeks ago, October 19th, according to Mortgage News Daily, the average fixed-rate mortgage, the average 30-year fixed rate being offered in the U.S. was 8.03%. As of yesterday, before even this latest fall in the 10-year Treasury, it was down to 7.51, so we're probably going to be somewhere around 7.4 today. So mortgage rates just fell 0.2% in 2 weeks. how much does that change buyers' habits when they go out and look at a property now?
Right.
Hey, I can lock in at 7.4 instead of at
This is the
8.
drop I was waiting for.
Great. I'm gonna be really aggressive right now. And what does that do to economic activity?
So the exact quote from Jerome Powell, I'm going to read it here. Longer-term rates that have moved up, they can't simply be a reflection of expected policy moves from us that if we didn't follow through on them, then the rates would come back down. On Wednesday, the Federal Reserve did not raise interest rates, which was widely anticipated, but they did not raise interest rates. And Treasury yields on long-term Treasuries went from 4.9 to today under 4.6. What happened is precisely what he warned against during that meeting. If this happens, we're going to have to change our policy, and you got exactly what it does. I wonder if that changes at all the outlook for the December meeting of the Federal Reserve. Probably not.
I don't think it does, because the implication on that idea is if those rates come down, then there could be more activity that makes us need to change our strategy.
So you do have to see the activity.
You do.
Yeah.
And so the December meeting now, you're going to have, what date is the December meeting?
13th. Yeah.
It's the 13th, so that's usually right around the CPI release. I'll have to check when that CPI release is going to be. But most likely you've got one more jobs report, one more PCE, and either one or two CPIs. There are 4 data points that are really going to matter when it comes to December. CPI for October, which is coming a week from Tuesday, I believe. I think it's on the 13th of this 13th or 14th of November. I wouldn't be surprised if that one's negative, quite honestly.
Right.
Because gas prices fell 10% over the course of October, and gas prices are weighted 7% in CPI. That creates a decent drag if you get that showing up. So that one's kind of off the table. Even if lower gas prices give people more money to spend elsewhere, that could reflect more activity as well. You don't really hike into a drop or a flat CPI.
No.
So then you're kind of saying, okay, PCE is going to be in that ballpark too. It's probably going to be flat to 0.1. So really you're looking at a jobs report and maybe one other CPI, and the jobs report now is kind of back to pre-October trend. It's a tough putt to see them doing anything in December.
Yeah.
If you want to say, hey, could things change by January or March, which are their next 2 meetings? Maybe. But December, it's tough for me to see it being live, and markets are pricing that in now with only a 9.6% chance of a hike there, according to the Chicago Mercantile Exchange. Let's take a quick break here, and when we come back, it's Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems, where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV in the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News & World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is Susan and Mike from the Armstrong Advisory Group, and this month we're talking about our free guide, the top year-end financial tips. Mike, the holidays are coming, and that brings with it the desire to gift to your family. What are the rules around the annual gifting limits?
Well, you, Susan, owe me a gift every single year, as we know. But I don't think that's what we're actually talking about. What the rules state is that you're able to make gifts in 2023 up to $17,000 without triggering any sort of reporting or paperwork requirements to the IRS. If you go above that $17,000 exemption amount per person, then you do have to file a gift tax return, but it doesn't necessarily mean that there will be any taxes owed. That's where a tax professional really comes into play here to make sure you understand what the ramifications of that are. But gifts to 529 plans, for instance, if you're looking to fund a specific goal, are very common this time of year.
So if someone's thinking about gifting away as a strategy to reduce their taxable estate, Mike, how do they go about that if they want to give away much more than the $17,000? That's the freebie, if you will.
Honestly, more than we can get to in a quick discussion, but you need to talk to a couple of planners here to make sure you understand the tax ramifications and understand the current limits, because states like Massachusetts just completely redid their estate tax, so there's new things to know about that type of strategy.
Folks, we have information about gifting as well as much more in our brand new guide, The Top Year-End Financial Tips. You can get your copy today by calling 800-393-4001. That's 800-393-4001, or request one online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
All right, markets are currently in the green, which is rare when I'm here. Dow Jones is up 0.4%, S&P 500 up just under 0.7%, and the NASDAQ is up 92 points right now as markets are reacting to the October jobs report. We're going to start off by looking at Block. The fintech stock is up 12% a day after the company reported third quarter earnings that beat analyst estimates on the top and bottom line. Block also showed strong growth in both Cash App and Square revenue while hiking its full-year guidance. The vacation booking platform Expedia is up nearly 17% on the heels of a strong third-quarter report. Expedia said on Thursday that it earned an adjusted $5.41 per share on $3.93 billion in revenue, topping the expectations, which forecasted $4.93 per share and revenue at $3.86 billion. Ticket provider Live Nation is down just under 0.5% a day after beating expectations for both lines when reporting earnings for the third quarter. Live Nation's successful report comes as Taylor Swift and Beyoncé's tours have dominated the music world, driving fans to buy concert tickets. Used car retailer Carvana popped 8.3% after its Thursday earnings report showed slightly weaker revenue than expected. Carvana said it saw $2.77 billion in revenue for the quarter, a hair under the consensus estimate of $2.78 billion. And finally, Apple shares have retreated 2.2%. The big technology company posted its fourth straight decline in quarterly sales and provided a soft outlook for revenue in the December quarter. That outweighed the fact that the company beat analysts' expectations on both lines in the fiscal fourth quarter. I am Ben Kitchen, and that is Wall Street Watch.
Sam Bankman-Fried, SBF as he's
lovingly referred to.
Known. He was on trial for 7 counts of various crimes related to fraud and conspiracy and fraud, more fraud.
Yeah.
Lots of billions of dollars of fraud.
I feel like nobody's unaware of this, but ran what was arguably the most well-known and one of the largest crypto platforms out there, FTX.
And was charged with stealing as much as $10 billion from customers to finance all kinds of stuff that he did, anything from political contributions, VC investments, just other trading within a different part of his firm.
Sponsorships, hanging out with celebrities who were going to do advertisements.
And this was all also wrapped in the idea he was the face of the effective altruism movement, which is the idea that you shouldn't feel guilty about making lots of money as long as you can direct it towards causes that are good and just. And again, it's kind of like, okay, well, who determines what causes are good and just? Because clearly yours, were kind of messed up. So he ended up being convicted on all 7 counts. The jury took a little bit over 4 hours of deliberation. It went until about 7:30 or 8 last night. They ordered pizza, and I'm convinced that this would have only gone an hour or two if they didn't want a free meal out of their jury duty. But...
and a book deal down the road.
Bankman-Fried now faces a possible maximum sentence of 110 years. I don't know how much he's actually going to be sentenced to. I don't know how much he'll actually serve. But I've said for a while that the thing that has bothered me the most about Bankman-Fried is that he's not dumb. I mean, again, you don't go to MIT and then build a net worth of billions of dollars by being dumb.
Sure.
But the way he talks is as if he thinks everyone else is really dumb. And it's just kind of fitting that, he was trying to say, I didn't have a hand in any of this. And it's like, there's text messages and signal messages and emails that you sent orchestrating the whole thing.
Right.
And you expect us to just...
some of the highlights...
pretend that you didn't know?
Of the fraud. I mean, they maintained 6 different balance sheets at times that they would put out there as their true balance sheet at any different point in time. To my knowledge, and granted, not a CPA here, but I believe you're supposed to have one balance sheet. It tells you the balance of assets and liabilities, not 6 of them.
Did you ever watch the Everybody Loves Raymond where he tries to run the checkbook for a month?
No.
Where Ray does? And he ends up with 3 checkbooks because he bounced a check from the second checkbook that he was trying to run as a fake one. This kind of reminds me of that.
Yeah. The court case itself sounded like quite entertaining. Every day people would be lining up as early as 10:30 p.m. the night before to try and get a seat in the courtroom. There was different times applause from people watching the court case, and I guess other than the, I hate to call it an entertainment factor because it's like the Bernie Madoff scheme, devastated the finances of hundreds of thousands of people, if not millions of people. So let's be clear about that. People lost their money by trusting into a platform that was ripping them off. I wonder what this means for the industry, because a lot of people are arguing a lot of different things about the industry. I don't know if you have a take on that, Chuck.
About the crypto industry?
Yeah.
Well, it's ultimately going to result, probably rightly so at this point, in way more additional regulation that's going to effectively kill the promise of what crypto was, which was a decentralized ledger that's not really tied in and connected to the financial industry as a whole. And instead, it's just going to become another lever that gets pulled in asset. I don't even know if crypto is really an asset, but it just becomes another asset class, if you want, in the Wall Street casino.
Yeah.
Which,
that's where I land. Is I think that this case is great news for the Fidelities and BlackRocks of the world.
yes, it is.
They want the regulated Bitcoin that they can sell to their customers, and it seems very unlikely to me that you can go forward with the path that you described, which other players out there still want and have a vision of this decentralized crypto platform. The problem of that decentralized platform is
Well, the problem is that you committed one of the biggest frauds in American history.
And there's nothing to prevent that from happening again.
And so you had your chance to be the adult in the room. And by the way, Bankman-Fried was one of these people who's like, yeah, like we are the adults in the room. Like he was the guy that venture capitalists were holding up like, yeah, this guy's legit. He's the one.
He's got the right moral compass on his shoulders. He'll be the one to save this industry.
You know what this reminds me of?
No.
Elizabeth Holmes and Theranos. A lot of really smart people
it's up there.
Trusted both of them to say, hey, they're doing things different and better, and they're the ones who we're going to push forward.
Yeah.
A lot of really smart people fell for this. And I'm not, when I say fell for this, I don't mean like crypto. Look, there's people who've made money in crypto, I'm sure. I'm saying they fell for FTX and Sam Bankman-Fried.
Yeah.
And it's just a real cautionary tale of the fact that due diligence is not just a trip to talk to someone and take them out to dinner. Like, you got to actually knock the numbers around and spend some time with it. Because if a company's running 6 balance sheets, you should be able to figure that out.
Especially if you're a big private equity or hedge fund firm.
If you're a venture capitalist, like that's...
And that honestly, you're right. That is the same lesson from Theranos. That is the same lesson from Bernie Madoff, which is if all of your due diligence is you talk to a few people you trust and they all said that this person's great,
that's not good.
That's not due diligence.
That's it's not even undue diligence. It's no diligence.
Yeah.
So I think that's what I take away from this is that I wonder if this is an issue with how we've started to idolize these founders of companies in a way that's not healthy, where we put them up on this pedestal and we make them heroes in a way that they're not. Like, they're good at business. Well, in this case, they were good at fraud, not business. But sometimes we try to pretend like we know who these people are, and all we really get are the snippets that they want us to see. And this is a really clear case of that. Like Bankman-Fried, he did the interview with, I forget who it was. I think it was someone from Vox immediately afterwards. And they were like, why'd you, make all these political contributions and why'd you support these causes? And he's like, I thought it would make me look good.
Yeah, and that was also the accusation from Caroline Ellison, too, is that his entire image, the unkempt hair, the cargo shorts, the T-shirts, was all part of a carefully curated image rather than, what it was touted as, oh, look at this nerdy guy who doesn't care about his image and is too busy working on his dream project to get a haircut.
Did you see the courtroom sketch of Sam Bankman-Fried? So you know how Tom Brady's was awful and made him look just absolutely horrible?
Yeah, I remember.
Sam Bankman-Fried had one done. I'm going to show this to you, Mike. It makes him look like a male model.
It does.
It makes him look like a male model, just as long as we're talking about image. So Bankman-Fried's going to be spending a lot of time behind bars, and it's deserved because he scammed a whole bunch of people. And I think it's really just a cautionary tale in the dangers of trusting, the prophetic CEO that we put up there and say, oh, they're so smart they can do everything. A little humility on this stuff is worth it, I think. Let's take a quick break here, and when we come back, we'll talk about the UAW's next challenge that they have right after this.
Wall Street's volatility continues as the threat of a recession lingers. Breaking business news all morning long, only here on the Financial Exchange Radio Network.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, you can create significant problems. Gifting assets to your children is admirable, but may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing & Dolan and asking for their brand new guide called Making the Most of Gifting Assets. In it, you'll learn about information related to the gifting process, what tax issues may arise from a major gift like a home or a vacation property, and what happens to the asset if a child has creditor issues. Call 866-848-5699. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston. Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
So the UAW has tentatively agreed to agreements with all three of the major U.S. automakers. You like that, tentatively agreed to agreements? Is that what you were going with?
Agreed to agreements was what I was focusing in on there, yeah. I like that.
I think it's right. And now the big thing, though, is that the rank and file have to actually vote on these.
Yeah, so far be it from me from knowing what's going on the ground at the UAW, but it seems to me from an outsider's perspective that everybody's been in line with Sean Fain and the direction that he has wanted to go with these strikes and the direction that his negotiations. And I would be quite surprised if getting the members to vote yes on this is actually a challenge.
Yeah, here's the bellwether at least, so that you've started to see some facilities complete their voting already.
Yeah.
At Ford's Bronco factory, which is in suburban Detroit, workers who were on strike for 6 weeks, 82% voted to accept the proposed contract. All you need is a straight majority.
Yeah.
So when you're winning 82 to 18,
seems to be a non-issue.
Again, this was a facility that was on strike, so maybe they're a little bit more itchy to get back to work.
True.
Just to, they haven't been getting full pay and everything. They've been getting money from the strike fund, but I don't know that makes a 30% difference in how the vote comes out. So it seems like you're probably heading in that direction.
Yep.
Of ratification.
If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December, according to U.S. News & World Report. December is the start of the dry season on the island, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visit usvi.com, learn about all three islands, and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
So, talking a little bit more about this, the UAW obviously represents workers in these three companies, Stellantis, Ford, and GM.
Yeah, particularly concentrated in that Rust Belt area of the country, Ohio, Michigan. It's where a lot of those factories are just geographically located.
So, you've got a bunch of non-union manufacturers as well in the U.S. Tesla, Toyota, Honda, Volkswagen, Nissan, a lot of them.
Pretty much everybody other than Ford.
Toyota this week is so nervous about the potential for unionization. A couple different things. First, they raised pay by 9% immediately. Mm-hmm. And then this is from labornotes.org, who I don't know exactly who they are, but I guess they take notes on
labor.
And I'll quote here, Labor Notes received a message from a Toyota worker in Alabama the next day after the contract was signed with the UAW. Toyota, clearly running scared, was raising top pay to $32 and shortening the time to get there from 8 years to 4, similar to what we saw in the union negotiations. Another worker at a Toyota plant in Kentucky said the company was boosting wages and slashing the progression of the top rate in half there, too. The top rate will increase $2.94 to $34.80 for production workers and $3.70 to $43.20 for skilled trades. So if you're looking at what this is doing, it's not that non-union shops are saying, well, we can just sit this out because we're non-union. They're pretty much saying, hey, we're going to give you this stuff right away because we don't want you looking at unionizing and having to deal with that.
Yeah. It's tough to say whether or not the UAW will be successful in making inroads in any other automakers. I mean, this has definitely been a moment for unions over the last 2 years. Let's not mistake that. UPS has had a pretty big win. Again, probably not the corporate UPS, but the workers at UPS and many, many others have had successful strikes that have resulted in meaningful pay increases this year. The long-term trend, however, has been quite the opposite. It's been downward in terms of union membership, and we haven't seen that move in a long while. And I'm not sure we should interpret this moment as a long-term push for unions that's going to be successful.
It might be a blip just because of how the labor market is.
It could be, yeah. It could be. But, yeah, if one of those dominoes fell, then it could also be fairly interesting there in terms of what would happen at a Tesla, what would happen at a Toyota, at any of these different places if they did have that union vote.
Now, it is also fair to say that, and we talked about this when Sean Fain was outlining what the UAW wanted, they clearly didn't get a 32-hour work week.
Nor did they get a 40% pay bump.
Nor did they get the restoration of pensions. What they did get was a still significant bump over the 4.5 years of this contract, 25%. You've got a huge shortening of how long it takes you to get to the top pay rate as well.
Profit sharing.
I mean, there's a lot here that workers ended up getting, and non-union shops are having to pick up their wages and benefits as well as a result. So it's out of all of the negotiations that we've seen, this I think is the most meaningful win that I've seen.
Yeah, I would. It's up there. I'd hesitate to know. I haven't looked at the details of the UPS one, for example.
Especially in the context of how these workers have been able to benefit or how they've been treated the last 15, 20 years.
Certainly few have been more public than this one.
Yeah. Let's take a quick break here, but we got more coming up in hour 2 of the Financial Exchange.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about the implications of gifting your assets away. Todd, what happens if you give your home to your child in an effort to protect it from the nursing home, and later on you decide you want to sell it?
Yeah, that's just one of the problems of giving away your house, but let's explore it. If you give your house to your child thinking, okay, that was easy, but now you don't own it. So now you really have no right to live there and, of course, no right to sell it, right? Now, if you happen to have kids that are really nice and you ask their permission, which I don't ever want my clients to have to do, to say, please sell the house, you've also given them a huge tax liability because all the proceeds would go to them. Now, you don't have the money you need to buy your new house. And plus, if they don't live with you, then they don't get this capital gains exclusion that goes around along with selling your primary residence. So you're creating an adverse capital gains tax bill for them to pay. And then in addition to that, if they are nice, after they pay the tax, then they have to give you the money back, which could create a gift tax problem for them and impact their estate planning efforts. Finally, you get the money back, and then you can go ahead and buy another house. Folks, don't go through that. Set up an irrevocable trust to protect your assets from the cost of long-term care.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699. That's 866-848-5699. Or you can request a copy from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Are you retired like me, and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Finding great candidates to hire can be like, well, trying to find a needle in a haystack, but not with ZipRecruiter. Its powerful technology actively finds and invites qualified candidates to apply to your job. So while other companies might deliver a lot of hay, ZipRecruiter finds you the needle in the haystack.
See why 4 out of 5 employers who post a job on ZipRecruiter get a quality candidate within the first day. Try ZipRecruiter for free at ZipRecruiter.com/free. That's ZipRecruiter.com/free.
At Consumer Cellular, you get the same exact coverage as the largest carriers, but for up to half the cost. Same thing, up to half the cost. Up to half the cost for the same thing. 50% the money for 100% the same thing. I hope I'm making myself clear. Consumer Cellular. When freedom calls, we're here to answer. Call us at 1-888-FREEDOM.
Half the cost savings based on cost of Consumer Cellular single-line 5GB data plan with unlimited talk and text compared to lowest cost single-line postpaid unlimited talk, text, and data plan offered by T-Mobile and Verizon May 2023.
Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, you can create significant problems. Gifting assets to your children is admirable, but may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing & Dolan and asking for their brand new guide called Making the Most of Gifting Assets. In it, you'll learn about information related to the gifting process, what tax issues may arise from a major gift like a home or a vacation property, and what happens to the asset if a child has creditor issues. Call 866-848-5699. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Fine-tuning your financial strategy as the year comes to a close is very important. So this month, we're sharing what we believe are the most crucial year-end financial tips. As 2023 winds down, there are several opportunities for you to consider that may help you end this year with as little concern as possible about your overall planning. Things like maximizing your charitable giving, offsetting your capital gains, and contributing as much money as you can to your IRA or 401k plan. We'll walk you through these issues and more in our new free guide called the Top Year-End Financial Tips. Get yours today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by taking part in this year's DAV 5K. For more information, visit DAV5K.Boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Kicking off the 11 o'clock hour here on the Financial Exchange, and we've got a broad-based rally continuing for not the first, not the second, not the third, not the fourth, but the fifth straight day this week. It's Chuck, Mike, and Ben with you, and look, there's still ways to go. We still got 5 hours until the close, so anything can happen, especially heading into a weekend. You never know. I mean, again, it's been a monster week, just to put this in perspective. We closed last week on Friday on the S&P 500 at 4117. As of right now, the S&P 500 is at 4352. So if we do a little bit of maths, the maths, if you will, and say, hey, what does that mean? It means the S&P 500 has returned 5.7% so far this week if it were to close right now.
Now, are we still below where we were this summer? Yeah, very much so. And the market's rising 5% after they fell 6% does not mean that you are 1% away from those highs. That's not how the maths work.
No.
But it has been a fairly significant rally on part sentiment shift, part real interest rate moves.
Yeah, and ultimately, when we talk about what we're seeing today, we got a jobs report this morning that came in really with a Goldilocks set of numbers for the ones that you want to see.
Let's dive in there. 150,000 jobs created, which was below forecasts of 180 and below the previous month of 336. So fewer jobs created. Unemployment rate up by 0.1 percentage point. When you talked to households, so we take those data points from the establishment survey, but then separately they do a household survey.
Unemployment's actually from the household.
Yeah, unemployment rate is from the household survey, correct. You saw an actual net loss in total jobs. So Goldilocks, not necessarily from the person out there that's looking for a job, but for the Federal Reserve and for equity markets.
Yes.
As close as Goldilocks as you get.
The question, as we've been talking about here, is there's always a period before every recession where data looks like this, and people say, oh, like, we're fine.
Yeah, it doesn't usually go the way it did in March of 2020, where everything's hunky-dory, and then all of a sudden you lose 10 million jobs in 3 months. That's usually not what happens. Usually there is a pivot point, and the question is, are we in the midst of a pivot point towards a recession? Or are we in the midst of a pivot point towards a just regular economy that can chug along and create jobs at about the pace of population growth?
And a couple things on this. The first is I have no insight into this right now. I think it's going to be a month or two before we know what direction we're heading in. But I think we'll have a pretty clear picture. January, February, I think we'll start to have a pretty clear picture. The second piece, and this is going to sound strange at first, whether or not the U.S. goes into recession is not important. And what I mean by that is that economies that aren't in recession can still feel very bad. See the first half of 2022. There was no recession in the first half of last year, but there was a huge slowdown in the economy, predominantly because of inflationary pressures. And as a result, it felt really bad for all of us. And markets got punished as well. So you don't need a recession inherently in order to have a lot of economic pain. And I just like to point that out because there's always so much focus on, is this a recession? Wrong question. Recession matters for one thing, and that's job loss, in my opinion. The rest is just, hey, you can have a really bad economy without a recession.
Yep. See 2022.
Even take a look at 2011 through 2013.
Yeah.
Unemployment was north of 6% that whole time. No one would look at like 2012 and be like, hey, this economy's ripping.
Yeah.
Wow.
Slow growth, high unemployment, but not a recession.
Let's talk a little bit about zoos. Or a zoo.
Or businesses in general. But zoos are a good example.
I know, but this piece from the New York Times focuses on the petting zoo.
Yep.
Leesburg Animal Park. It's in Northern Virginia. And it's what you would think. There's places like this all over the place. It's a petting zoo. It's got, some slides and stuff like that. It's got a corn maze. It's America in the fall.
Mm-hmm.
And they've raised prices. It was rainy, not exactly optimal conditions. And they're still cranking along as far as people coming and visiting. And the case that the owner is making is, the economy's still good because people start cutting out these visits when things turn down because they can't afford them anymore.
And we're not seeing that. What they're also saying, though, is in spite of this strong year we've had and the spending that we're seeing, we're not going to go stick our neck out there and go borrow a bunch of money to expand this thing.
No.
And that's an interesting comment that I hear reverberating around a lot of businesses, which is things are pretty good right now, but we remain nervous and rates are high, so we're not going to go look to expand and stick our neck out because we don't know what's coming down the road. And that can be problematic. So this story actually reminded me of a good friend of my wife's who she and her husband operate a very similar type of experience business. It's called Harvest Time. It started as a pumpkin patch out in Indiana, and now they've expanded to like everything during the summer and the spring. They've got flower picking. They have in the winter,
hay rides. I'm sure
hay rides. They have Christmas lights in the winter. They do an Easter thing with an Easter egg hunt.
Probably fireworks at 4th of July.
Exactly, and very successful. They've done a fantastic job with it, and up for the last several years, they've had a drive-through holiday lights thing.
Yeah.
So if you've ever been to one of those are fun as well. I feel like I went to several of them during the pandemic. This year, what they've said is, we have to have huge amounts of staff for that. We have to hire a ton of people. We're changing this around. It's going to be a walkthrough experience. We can cut down on the number of people we need. We don't need to spend quite as much on this. And so instead of a drive-through experience, you're going to have to walk through the holiday lights special instead. And to me, kind of rang similar to that exact story, which is we're just not sure how this season's going to be, what the future is going to look like. And so we don't want to stick our neck out there and spend a whole bunch of money hiring a whole bunch of people. It might not be busy enough given the demand we're not sure we will have. And that's honestly feeds right into the same point we were making before, which is that could be just an indication of the economy slowing to a more normalized pace of not 5% GDP anymore. It could be the area that you cross through on the way down to a recession. And it's really tough to know in the moment. Really tough to know.
It is. Let's take a quick break here. When we come back, we have trivia, and then we're talking about what the Bond King is saying about bonds after this.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network. Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, you can create significant problems. Gifting assets to your children is admirable, but may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing & Dolan and asking for their brand new guide called Making the Most of Gifting Assets. In it, you'll learn about information related to the gifting process, what tax issues may arise from a major gift like a home or a vacation property, and what happens to the asset if a child has creditor issues. Call 866-848-5699. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle, Albert Vonner, served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father, Victor, and brother, Timothy. I am a veteran, and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Hi folks, it's Susan and Mike from the Armstrong Advisory Group to talk with you today about our top year-end planning tips, which are featured in our brand new guide for the month of November. There's a lot of information in this guide, Mike, that we can certainly use throughout the course of the year, but some of the tips that we've included, if you don't implement them before year-end, it's too late. What are those?
Yeah, so a lot of them have to do with retirement accounts. So for instance, if you have a required minimum distribution, that's a 12/31 due date, and most of the custodians actually require you to do it earlier than that, so get on it if you have an RMD. If you're considering a Roth conversion, that also needs to be done by December 31st. You can't do it until your tax filing deadline. And 401k contributions, once again, must be in to your employer-sponsored plan before year-end. You have a little bit more flexibility if you have an IRA, but with some of those things, it's by year-end, not the tax filing deadline. There's also a big one to keep track of this time of year that a lot of people look into, and that has to do with harvesting potential losses. And given the way that markets have fluctuated this year, it very well could be that you have some capital losses in an investment portfolio, and at least looking at those and seeing how they could benefit you from a tax perspective is important. Obviously, caveat, speak with a tax professional or advisor when looking at this type of thing.
Great. Thanks, Mike. Folks, you can request your free copy of this brand new guide by calling 800-393-4001. That's 800-393-4001. You can also request your free copy of our top year-end planning tips guide by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Fall is in full swing, the cold weather is coming, and now is the perfect time to get a head start on your next vacation. The U.S. Virgin Islands have been named one of the top Caribbean destinations so far this year according to Travel Pulse. Explore St. Croix, St. Thomas, or St. John and enjoy incredible beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required and no money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com. All right, trivia time now. Trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now that's eating good in the neighborhood. Void where prohibited. Dine in only. All right, today's trivia question is we're going to take a look at Apple. Not the big stuff from Apple, just the smaller stuff from Apple. They've been in the news lately for their Apple Films division. They had recently co-financed and co-distributed Martin Scorsese's Killers of the Flower Moon. But Apple kind of struggled to make an impact in the film industry until their movie won Best Picture at the Academy Awards in 2022. So, today's question, which Apple movie won Best Picture at the Oscars in 2022? Be the second person to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text. We'll give away the Applebee's gift card on today's show. That's 617-362-1385, and the second correct response will be our winner. See the complete contest rules at financialexchangeshow.com.
Mike, it's been almost an hour and a half today, and we haven't touched on the biggest company in the world reporting earnings yesterday.
Which beat.
But not by what investors wanted to see. So Apple stock down about 1.25% today, and really what it comes down to is that it's not even that they didn't beat by as much as they thought they would. They didn't guide for Q4 where investors thought they would.
So in the fourth quarter, its fiscal fourth quarter, Apple reported earnings per share of $1.46 on a revenue that reached $89.5 billion. $1
billion a day in electronics.
Nobody here will criticize Apple that's just, not good enough. That is actually I will. It's not good enough for them to see their stock price move up. The point is that this mega company whose market capitalization sits at $2.75 trillion doesn't expect to grow this holiday season.
No, they're expecting to see sales somewhere in the ballpark of last year, which was about $117 billion. Remember, holiday quarter, people buy more iPhones and iPads and yada yada.
Now, their CFO pointed out there's one fewer week in this holiday quarter than there was last year, so there's that to adjust for. But I think
if you're really growing, it doesn't matter.
No, it doesn't. You're trying to find excuses if you're pointing that out, and I think that's what you look at this company. You say, look, this is a tremendously profitable company. Nobody can debate what's going on with Apple right now. But the question becomes, when you are this large, what is going to be the next leg up? I have doubts about, the story of, they're not going to be able to manufacture in China anymore because of retaliation there. But clearly, you're not seeing the type of sales that they wanted to see in China anymore to the same degree that they were growing previously because of a number of different issues. And so are you going to have a new Apple Watch or AirPods that are going to move a leg up again in sales? Presumably at some point they will. They have for decades come up with that next top-notch product, but it's been a while.
Mike, do you know that in the last decade, Apple's returned over $800 billion to shareholders between dividends and buybacks?
Believe it.
That's, if you're just talking about growing share price and things like that and providing, the path.
It's one way to do it.
Maybe it's not necessarily through capital appreciation. It's through, these types of things. So, yeah, that's kind of ridiculous. At this point now, they're doing about $25 billion a quarter. And their cash pile is still $162 billion.
Yeah.
It's unfathomable just how much money this company makes. I mean, they sold $90 billion of stuff. Just about. Their margins, well, actually, this is gross margin, but their operating margins, you're talking like 20%. It's nuts. They are just, it's billions upon billions of dollars.
How much did they sell? This was in the most recent quarter, right?
Yeah, they did $87.5 billion.
Got it. So
it's $1 billion
annualize that. That's
well, I have the trailing 12 month now is $383 billion.
Okay, so I've got something to compare that to. It's about the size of Iran's GDP.
So Apple is Iran, is the message that you want to convey today.
I don't think that they would like to make that comparison. But we are talking about a company that sells more stuff, or about as much stuff, dollar-wise as the entire country of Iran. How about Denmark? You like that comparison better?
Yeah, the Danes are nice.
Pakistan, Hong Kong,
I mean, look,
Colombia, all
the
the
Iranian
same
people are
territories.
nice. It's just the Iranian regime's the
Yeah,
problem. Like
yeah, it
it
seems to be.
Yeah. But when we look at Apple, it's not just that they sell that much stuff, because there are other companies that sell that much stuff.
Sure.
Just as an example, Amazon. Amazon actually, I think, sells more stuff. Apple sales over the last year are $383 billion. Amazon's are $554.
Probably
Amazon
make like 30 cents on every
Amazon's net income on that $554 billion is about $20 billion. 4% and change margins. Apple, on $383 billion, made $94 billion in profit.
Yeah.
It's $1 billion in profit every 4 days.
Yeah.
Their operating margins are 29%. It's fat.
So I don't think you can criticize Apple for being a massively profitable company. And every time that anyone has doubted Apple's ability to continue to grow their business, they've been wrong. It's not that every one of their products has worked. Like their Apple Home product has not worked, but it turned out that neither did Google's or Amazon's. Those have just been unprofitable business units for them.
Yeah.
So, I haven't seen the Apple Car. I haven't heard anything about the Apple VR headset. So, look, plenty of criticism to go around.
Well, they have the beta version of the VR headset. They haven't started delivering it
That
yet.
would be my point. There's plenty of things that Apple's still talking about, none of which I can envision in my head being the next Apple Watch or headphones. But, God, I've been wrong about this every single time before. So,
speaking of Apple Car, so I got a new car a month ago. And my last one was 10 years old. So there's a big jump in the technology when you have a 10-year gap in vehicles.
Is there a cassette player in your new one?
It's an 8-track.
Ah, you got it.
Yeah, it's wonderful. Apple CarPlay is really cool. Like just it's like, oh,
Again, you're like 6 years behind here.
I know, but this is brand new to me. It's brand new. It's kind of like, again, my last car that I bought was back in 2014. I'm like, oh, Bluetooth, that's what this is.
Yeah. Pretty neat stuff here.
This is wild. But it's nice to be current because I didn't know that you could have such a great system. So I'm kind of like Apple. Why would you want to build a car? It's low margin. Like don't do that. Just find a way to make more money off Apple CarPlay because I've used it for a month, and I would gladly shell out $5 a month to be able to do it.
Yeah. And maybe that's the answer, is that their software is finally going to be the growth engine of that company going forward. I don't know.
Yeah. But Apple, don't build a car. Automakers are where capital goes to die. And yes, I know people say, oh, well, what about Tesla? Tesla is the one U.S. automaker in the last 80 years that has successfully launched.
Exception to the rule.
And by the way, they haven't even been around 20 years yet, so let's not count our chickens. I think they're fine, but it's not like they have this long-term track record. They've been around. When did they launch the Roadster originally? Was that like 2010, 2011?
No, I think it was earlier than that.
07, 08?
Yeah, I think it was in the 2000s decade.
You guys know they're bringing back the Roadster, right?
Yeah.
A revived one?
Yeah.
It's a cool-looking car. Let's take a break here. When we come back, we've got the trivia answer.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today, we're talking about the implications of gifting assets away. Todd, if you're trying to protect your assets from the cost of long-term care expenses, what are the risks in giving your assets to a child rather than transferring them to an irrevocable trust?
Yeah, that's a great question. So many people feel like, oh my gosh, it's an irrevocable trust. I've lost all control. I've given up the ability to do just about anything. You know, you hear that all the time. But you know what? Think about it. If I instead gave my investment portfolio to my children, right, or my rental property to my children, I mean, how much control do I have over that? I got none. I mean, I got to rely on them to pretty much do everything, not to mention the fact that, you know, let's say I gave my rental property away. Technically, I can't sell it. I can't do anything without the children doing it. And what you forget is the children then would be entitled to all the rent. Well, you gave away your rental income. You know, what about if a child gets a divorce and you gave them an investment portfolio to hold on to? Well, that money would all be subject to their divorce or any of their creditors. Plus, it all gets picked up on their income tax return. Folks, you give away assets, you lose all control and create lots of adverse income tax and gift tax consequences. You're way better off setting up an irrevocable trust to protect your assets from the cost of long-term care.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699, or you can request a copy from LegalExchangeShow.com. Once again, 866-848-5699, or you can request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. For your chance to win our daily trivia contest, text us at 617-362-1385. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
All right, pay off a little trivia today. The question was, which movie that happened to be co-financed and co-distributed by Apple won Best Picture at the Oscars in 2022? And that would be Coda. Apple made history when Coda landed 3 Academy Awards, obviously Best Picture, but they also won Best Supporting Actor and Best Adapted Screenplay. The trivia winner today is Norman from Portland, Maine. He'll be walking home with a Financial Exchange Show t-shirt. And the winner of the $100 Applebee's gift card is Michael from Bradenton, Florida. Trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now that's eating good in the neighborhood. Void where prohibited. Dine in only.
There's a piece from Yahoo Finance, and I want to talk about it. The headline is, Bond King Jeffrey Gundlach warns that higher for longer interest rates could trigger the next financial crisis and advises investors to, quote, T-bill and chill. Now, the first thing that's funny about this is there's actually a typo in it. Not in the headline, but in the first paragraph, it refers to Jeff Gundlach as the Bong King, not the Bond King. So that's just a really funny typo.
Maybe that's how he came to this conclusion.
Jeff's a smart guy. Jeff knows his stuff.
I doubt he's ever been referred to as the Bong King.
In general, though, you don't want to be referred to as the Bond King because it's not really a title that has staying power. Bill Gross at PIMCO was the last one, and the peak of his career was maybe a decade or so. So when we look at this, how do you make sense of what Gundlach is saying, Mike?
What he seems to be warning of is, I think, a situation that all of us have heard recently, which is cash and CDs and all these things are paying so much interest. Why shouldn't I just be in there? And it seems to me to be part warning, but part also acceptance of that in some ways. But I think part of the warning here would be at some point rates come down. In all likelihood, according to Gundlach, at some points rates come down, in which case if all you're doing is sitting in money markets and 3-month CDs, then what that leads to is lower interest rates for longer.
And so what he's saying is, look, rates may come down in that short term, and so what do? And he's saying T-bill and chill. I'll read his quote. You can buy the 6-month T-bill and get 5.5%. That rate's no longer going higher, and it's starting to potentially decline, so I don't think you want to be in cash.
How does being a 6-month T-bill help you over cash?
It's not really materially different other than if rates start going down in like 3 months from now, maybe you don't get as much. I don't really know. I think the important thing on all of this, as I come back to an awful lot, is any dollar that you have saved somewhere, you need to have accounted for in terms of how much you have there and what the purpose is. If you have expenses in the next year, you don't want that money anywhere near the stock market or anything with any kind of volatility. You don't even want it near a long-term bond, given what we've seen recently. You want that money safe as it can be. If you've got money that you're saving for 20 years from now for retirement, and you say, hey, I've got a decent risk tolerance and I can handle these things, okay, you start to look at equities and stuff like that.
But quite honestly, that is a question that I think many of us have heard over the last several months, which is, look, I could go buy a CD paying me 5-6% interest recently. It's more than I would have earned in the bond market. It's more than potentially I even earned in the stock market, depending on what I invested in. Why not? And I get that question, right? It is incredibly tempting. There are reasons to consider that. There are reasons to brush it off and not go in that direction. But if you're trying to sit there and understand, hey, what do I do next? I have money to contribute to my 401k, or I'm saving up for my home, or I'm trying to put my kids through college and I've got this cash that I need to save somewhere and I just don't know what to do with it at this stage. Yes, I suppose Jeff Gundlach has some advice for you, but I'm not sure it's really tailored to the individual. And that's what we'd like to help you with here at the Armstrong Advisory Group. If you have questions like this, where do I go next? What do I do next? And what are the risks to it? Call the Armstrong Advisory Group. One of our people here, real life human beings, will answer the phone and talk to you about it. Number is 800-393-4001. Again, that's the Armstrong Advisory Group. And the phone number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's see, Mike. I got to talk about this story just for what it represents. Saudi Arabia is eyeing a stake in the Indian Premier League, which is a cricket league.
Mm-hmm.
It's not something... Have you ever watched more than 3 minutes of a cricket match?
I have not.
Ben, what about you?
Absolutely not.
I haven't either. I tried to play cricket once when I was at a summer camp when I was maybe 11 or 12, and we had a bunch of British guys who were the camp counselors.
So touch cricket.
And they tried to teach me cricket.
Yeah.
It didn't really take because I just didn't understand. You know how you got to throw the ball, but it's like they call it bowling? There's like a certain way you have to do it, and they kept telling me I was doing it wrong. And finally I just gave up because I was like, I don't understand this.
About a decade ago, I lived in a part of Cambridge and Somerville. I lived in Somerville, but I was near the Cambridge line, and there was a bar that opened that was dedicated to actually trying to sell itself as a cricket bar, and it did not last terribly long.
So you're saying it was crickets?
Yeah.
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 So in India, though, cricket is massive. I've been to India once about a decade ago, and the park that I visited was just a dirt field. There was no grass or anything, and it was just 8 simultaneous cricket games going on, overlapping each other, and somehow the people didn't run into each other. It was insane. So cricket's a big deal here, and this league is valued at as much as $30 billion. So we're talking, again, not the NFL, which if you add up like the total value of teams there, you're probably like $150, $200 billion.
Sure, but everyone's talking about India as the growth economy for the next 20 years.
And so Saudi Arabia's private investment fund is talking to Indian government officials about buying the cricket league effectively, or taking a major stake there. And the reason that I bring this up is because when the Saudis pretty much muscled their way into holding a major stake in what's likely to be the PGA Tour a couple months ago,
Yep.
I said that this is going to be coming for all sports in the near future. And even though cricket's not a big sport here, it certainly is in India. But this is stuff that you are going to see more and more where, hey, does the private investment fund take a minority stake in an NBA team or an NFL team? You've got a lot of leagues now that are starting to change their rules about who can be an owner on a team and how minority ownership rules can work. And this is something where it's going to become the norm that leagues are going to have significant investments from the Saudi private investment fund in particular, but all kinds of sovereign funds from countries that you might not personally be a huge fan of. And so this is going to be something that we kind of reckon with as fans of sports in terms of how we deal with it. And I don't have any great answers on this. I've said, like, if I'm a huge Bruins fan, if the private investment fund suddenly bought the Boston Bruins from the Jacobs family,
it'd be really problematic for me.
I don't know how I would handle that personally.
My answer would be that it would trouble me significantly, and I don't think it would trouble the average sports enthusiast.
Yeah, but once they spend more than the Jacobs family does on the team, you're going to be like, all right, I kind of like these guys.
Yeah, it's a complicated situation from a moral perspective, and I don't have good answers, but we're all going to have to reckon with this, I think. Let's take a quick break here. When we come back, we're going to be joined by Paul LaMonica talking about Hershey.
Breaking business and financial news first throughout the day, only here on the Financial Exchange Radio Network.
Hi, this is Susan Powers from the Armstrong Advisory Group. There are some important financial considerations to keep in mind as the end of the year approaches, so here are some crucial tips for you to think about. Our guide this month is called The Top Year-End Planning Tips, and in it, we'll walk you through key concepts like tax loss harvesting, family gifting, and properly calculating your required minimum distributions. All are important to your overall planning. Call our office today at 800-393-4001 and get your copy of this free guide that may help you finish 2023 with less concern about your financial strategy while setting you up for a positive start in 2024. Call 800-393-4001 and ask for your free guide today. Or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hi, this is Susan Powers from the Armstrong Advisory Group. There are some important financial considerations to keep in mind as the end of the year approaches, so here are some crucial tips for you to think about. Our guide this month is called the Top Year-End Planning Tips, and in it, we'll walk you through key concepts like tax loss harvesting, family gifting, and properly calculating your required minimum distributions. All are important to your overall planning. Call our office today at 800-393-4001 and get your copy of this free guide that may help you finish 2023 with less concern about your financial strategy while setting you up for a positive start in 2024. Call 800-393-4001 and ask for your free guide today. Or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
As promised, we're now joined by Paul LaMonica here to talk a little bit of Hershey with us. Paul, how are you today?
I'm good, thanks. How are you guys?
I'm still working through a little bit of a Twix hangover myself, but
Oy.
I'll
Left or right?
left Twix, only left Twix for me.
Yes, yeah. I'm a lefty, so I go for the Southpaw Twix as well.
I'm in the same boat, Paul. I know there's a reason why we get along so well. Let's talk a little bit about Hershey, though. The business. First, for listeners, is it more than just chocolate at this point?
It is. Hershey has made a series of acquisitions over the past couple of years. So now they have, in addition to the sweet treats, all the candy, you know, your Hershey's and Hershey's with almond and my beloved Special Dark. They've got Skinny Pop. They've got the maker of Pirate's Booty. They have really expanded into salty snacks, which is a more rapidly growing part of the market. They briefly owned Crave Jerky, but then that didn't really seem to be the best fit for the company, and they sold it back to its original founders. So Hershey is definitely experimenting right now with the product portfolio. I think they realize that candy and confectionery is really not the only way that they are going to continue growing at a robust pace. And the salty snacks business has had much better sales and profit growth than the rest of the company lately.
Are they indicating as a result then that they want to continue making these acquisitions of companies to bolster that portfolio?
Yeah, I wouldn't be surprised. They haven't specifically said that there is any target in mind, but we've had a fair amount of consolidation in the food business, both public companies and private companies. It wouldn't shock me if Hershey under CEO Michelle Buck is continuing to look for other smart purchases. But, you know, the company has many growing brands as part of its portfolio right now. So this might be the time to digest, pardon the pun, the acquisitions that they've already done before really looking to do another big one. And then, you know, I'm sure you'll want to ask about it, but obviously there are concerns right now about just, you know, all food and beverage companies are facing with Ozempic and these other increasingly popular injectable weight loss drugs, diabetes drugs, what impact that's going to have on the business. And, you know, that's, I think, one of the reasons why Hershey's stock is down as much as it is this year.
Right, because the ideal weight loss drug for a company like Hershey is the one that allows you to eat everything, but you just don't gain weight, not the one that stops you from eating their stuff, right?
Exactly. Anything that would be an appetite suppressant is clearly a problem. And I think that's one of the reasons why we've seen shares of companies like Pepsi and Coke have taken a big hit this year, as well as other food companies. But what's interesting is Hershey said they have not seen any material impact yet as a result of the rise in these popular drugs. There's also Mounjaro from Eli Lilly. But you know, I think the jury's still out what the long-term impact is going to be. But Pepsi also, which has a vibrant snacks business, in addition to its you know, carbonated beverages, their CEO said in an earnings call last month that they also really didn't see any negative impact yet. So it's possible that you know, investors are overreacting. Of course, another issue that's more prevalent right now is inflation. Yes. Which is still not completely gone away, and that could crimp demand perhaps more than these obesity drugs. People might be of a mindset where they're going to say, you know what, I'm not going to go buy as much chocolate and salty snacks at the grocery store because the prices are going up, even though they may actually still want to eat them, regardless of what's happening with these you know, new drugs that are suppressing appetites.
Very good. Paul, we appreciate you joining us today. Who the Giants have this weekend?
After last weekend, I'm not sure I even care. I'm more interested in my fantasy football team. We've won 5 in a row after an 0-3 start. So
nice.
Like the inverse of the Giants,
Yeah, it's fantastic. I'm 8-0 myself, but no one wants to hear me talk about my fantasy team. So I'll let you go, and we'll you know, comfort each other in misery this weekend that our teams are already eliminated from playoff contention.
Yes, there we go. It's a tough year for the Pats, but oh well.
It'll happen.
They did beat the Bills, didn't they?
Mixed feelings about that one, right? Barely. It's kind of like, hey, that's a great win, But if you're not going anywhere, why are you trying to win that game? Not trying to, but, I get why you're trying because, all the players have pride in this and that, but it kind of hurts the draft pick position. So it's a very mixed feeling, Paul, and I'm sure you can relate.
Yes, no, definitely. Race to the bottom. We'll all be hoping to get that number 1 pick.
There you go. Paul LaMonica talking about Hershey's today. Mike, you got anything for me in the stack that you want to cover?
American banks now look poised to stoke the economy. This is the opposite story that we've been reading about American banks for all of 2023 since the Silicon Valley Bank collapse back in April. It's from Bloomberg columnist Connor Sen. And the argument is very simple, that since April, all the banks have pulled back on lending to a significant degree and have been attempting to shore up their balance sheets. And at some point, they will reach a point that they can go out and actually compete for loans, drive interest rates down potentially, and stoke the economy. I have to tell you, I thought maybe some of the stories around banks collapsing and hitting a domino effect or a chain reaction effect were probably overblown. But this does read just like the story you get like 2 months before you see a series of bank collapses. I don't think we're likely to see them, but that is
I get what you're saying.
When I read a story like this, I go, oh boy, are we about to see some banks get into hot water here? Because I don't think that they are all completely out of that hot water yet.
And I also think that there has to be an impetus for them thinking that they can make money on said lending.
Yeah.
And I don't know. I don't know what looks cheap enough for them to be able to say
commercial real estate.
Yeah, this feels good to us in terms of where we want to be making these loans.
Yeah.
Because the last thing that you want to be is a bank that's on the hook for a property that's underwater, and you're the person you're the borrower. That's the term. They can't make their payments. Now you're stuck with a place that you got to sell for pennies on the dollar.
Not the right business model.
That's not great for them. Ideally, it's not what they're really good at. They're good at lending, not selling places that have defaulted. Let's take a break for the whole weekend, and I hope everyone has a great weekend. And we'll see you back here on Monday on the Financial Exchange.